Hi guys, this video will be about how to build a trading strategy. Especially for beginners in trading, it can be really confusing, all the parts of a strategy to understand what to do when, and they get confused really fast. For that reason, in this video we will go step by step through each step that belongs to a good working strategy and take a close look what belongs to this step and what is there to consider in order to create or develop a solid and sustainable strategy that will give you the chance to become profitable on a regular basis. So let's start right away. A good and reliable strategy should contain three big elements. The first one is the analysis of the market. So you take a really close look at the market and see what is the underlying trend, for example, where are the major support and resistance areas, to get an overview over the market and know what is going on right there. So you can decide whether to go long or short. And in the second part, there's the execution. It's the more detailed analysis because there you are formulating your entry and your exit. So you have to find reasons for entry. And you have to define those reasons really exact in order to always know whether to enter or not. So there's never a question coming up, or shall I enter now or not? Are my conditions met or not? It has to be really clear. I need to be able to wake you up in the middle of the night and you can tell me, is this a setup I would trade? Yes or not? Is it? So it's really important that it's clear. Otherwise, it will confuse you and it will fail. And the third one is the risk and money management. Also really important to always be in control of your risk and your money. And we will go through different concepts, what makes it easy how to stay in control of it. Let's take a look at the chart. First, we're going to start with the analysis. So let's have a look at the underlying trend. For that, we will go to a high time frame. We can go to the weekly time frame. We will start out with the top-down analysis. So we're gonna have a look at multi-time frames. If you want to know more in details about it, go to my multi-time frame video here on YouTube as well. But we're gonna start at the weekly time frame now, and you see that the underlying trend is long here. Moving down to the 4-hour chart, you also see the pullback was ending around this level, and then the market is making its way up again. So it's a uptrend here as well. But we also have to keep in mind our major support and resistance areas. Here the last high, and here's also a really strong support and resistance area, which is right in that area where the price action is happening right now. So let's zoom in further. And like we have seen here, it's still making higher highs and higher lows. Well, here there was a resistance in the market, and now we go one more time frame lower into the 50-minute chart. I zoomed out a little bit so you can see the support and resistance areas we have drawn in before. And a trading idea, for example, could be to wait until the market is coming into this support and resistance area and then look for a trade entry, because this is the analysis and the next step would already be part of the execution. And for the execution, it's really important to formulate really clear rules. Like I mentioned before, that you always know how to react and never have to ask yourself if this is really a setup you would trade or not. It has to be clear for you at all times. Only this way you make sure that your trading is repeatable. And if your trading is not repeatable, you won't be able to use it as a really sustainable and profitable strategy. So let's take a look into execution. For this, I will zoom in a little bit. A reason for entry can be a chart pattern, a candlestick pattern. You can use the Heikin Ashi candles for a trade entry or a breakout. It always depends on your strategy and what you feel comfortable with in trading. In this case, I will use a breakout strategy. So whenever the market leaves this support and resistance area to the long side, I will place an order long. Because, like we have analyzed before, on all three time frames we were looking at, the underlying trend direction is a long direction. This is why I only want to place orders long here. And when I'm zooming out a little bit, you see we have a uptrend here, then we had a pullback, and now we're making high highs and high lows again. The market came back into this strong support and resistance area, but the trend is still intact. So I'm waiting for a trade entry long whenever the market is breaking through this support and resistance area. This is the entry. We always need a strategy, a clear strategy for exit as well. It can be the combination of a stop loss and a target, like in our example here. You can also use more than one target, and you could also use a trailing stop loss, for example. Again, here, it's always really individual. It's depending on you, your strategy, and what you feel comfortable with in trading. Because, like I always really want to point out, it's really important that a trader feels comfortable with his strategy. Because if you don't have trust in your strategy, you can't be successful with it. There's no way around. And not every trader feels comfortable with every strategy. You will have to find out what is perfect working for you and what you feel comfortable with and what you have trust into. Which strategy you trust and you can be profitable with. So let's get back to this case, and here I will place my stop loss below the support and resistance area, out of that range where the market is likely to go back to. So you see there was building a bottom right here, the market didn't go deeper, and I'll leave some additional room for the stop loss that I don't get knocked out by the market by a spike down, for example. A different option to put a stop loss, for example, you can also use an indicator like the ATR indicator, for example. They're really different options. But in this case, I put my stop loss here, and my first target I put up here where we have drawn the major support and the resistance level at the last high of the market. So I will put the target a little bit below. So in case the market doesn't quite hit that area, because you know theory and practice don't always add up 100%. So it's also possible that the bears are taking over here right before this level. So it's always a level and not an exact line. That's why I have drawn in here the support and resistance as an area. And now what is left, it's the risk and money management. And you see my risk reward ratio here is 4.6. So it's a good ratio to trade because my risk is a lot smaller than my possible profit. And you should always make clear in your trading rules which risk you want to trade with. And I would always recommend to never go over 5% of your trading account. It's always really individual again, because every single person has a different risk attitude, but 5% for an account is a lot already. I would always recommend beginners to trade a volume of 0.5 or 1% of your trading account. So that's it for this video. I hope you enjoyed it, and I hope it helped you to get a good overview over how to build a trading strategy. And what I want to mention last, because I'm seeing it right now, always pay attention to those symbols down here. There are news coming into the market, and news can bring a lot of volatility into the market. That's why I would always recommend for beginners, don't trade into those trading hours. That's it. I hope you enjoyed this video. If you did so, please leave me a thumb up and a comment below. And don't forget to subscribe to my channel for more interesting videos to come up soon. And for those who are really interested in profitable trading, I have founded a new Telegram group, and I will put the link below this video. You can go ahead and join for free if you want to see my trading ideas and my setups and get the chance to copy my trades. That's the right place to be for you. I'll meet you there. Bye bye.